In my last episode, I said that I believe that we're in an AI bubble that's about to burst. And right now, I think I know where the money is going next. Because when a bubble pops, money doesn't just vanish out of thin air, it rotates. In 2000, when the technology bubble burst, it went into housing, and then the housing market crashed. And then it went back into tech stocks. And right now, it's rotating into AI. After the government bailed out the system in 2008, Bitcoin was born. And ever since then, it's been the best barometer of global liquidity and what's about to happen next in the financial system. Today, I'm going to show you the next 3 stages that I believe we're about to enter after the AI bubble bursts: the liquidation phase, the intervention phase, and the rotation phase. Today, I want to tell you what you should do to protect yourself to make sure that you're not forced to sell before the capital rotates back into Bitcoin. This is Dante Cook with Bitcoin Simply. Let's go. In my last episode, I showed you why artificial intelligence can absolutely change the world. SpaceX can become one of the most important companies ever created. And even still, world-changing companies can be wealth-destroying investments. After the dot-com bubble burst, investors didn't suddenly become responsible adults. Why? Because the Federal Reserve intervened. In 2000, the federal funds rate was 6.5%. In 2001, 1.8%. In 2003, it was at 1%. Money basically became free, and the euphoria shifted from tech stocks into real estate. No down payments, adjustable rate mortgages, no documentation loans, cash out refinances, HELOCs, and the final boss of them all, mortgage-backed securities. People were buying 3 houses when they had the budget to afford half of a house. But the crisis wasn't all bad. It actually produced one of the greatest rants of all time from Rick Santelli.
Also, we want to get to our task force right now. Rick Santelli and Jason Roney of Sharma Capital are standing by at the CME Group in Chicago. And Rick, have you been listening to this conversation?
Listening to it, I've been just glued to it because Mr. Ross has nailed it. You know, the government is promoting bad behavior because we certainly don't want to put stimulus forth and give people a whopping $8 or $10 in their check and think that they ought to save it. And in terms of modifications, I'll tell you what, I have an idea. You know, the new administration's big on computers and technology. How about this, President and new administration? Why don't you put up a website to have people vote on the internet as a referendum to see if we really want to subsidize the losers' mortgages, or would we like to at least buy cars and buy houses in foreclosure and give them to people that might have a chance to actually prosper down the road and reward people that could carry the water instead of drink the water.
Hey, Rick,
that's a novel idea.
Hey, Rick, did you?
What? Who thought of that?
Yeah, they're like putty in your hands. Did you hear?
No, they're not, Joe. They're not like putty in our hands. This is America. How many of you people want to pay for your neighbor's mortgage that has an extra bathroom and can't pay their bills? Raise their hand. How about we all? President Obama, are you listening?
How about we all stop paying our mortgage? It's a moral hazard.
This is like mob rule here. I'm getting scared. I'm glad I'm.
Why don't you guys don't get scared,
some
Joe.
bricks and
They're
bats.
already scaring you. You know, Cuba used to have mansions and a relatively decent economy. They moved from the individual to the collective. Now they're driving 54 Chevys. Maybe the last great car to come out of Detroit.
They're driving them on water too, which is a little strange to watch at
there
times.
You go.
Hey, Rick, how about the notion that Wilbur pointed out you can go down to 2% on the mortgage.
You could go down to minus 2%.
And still have 40%. And still
Here's what happens next. Mark my words. When this AI bubble bursts, the Fed is going to have to intervene. The stock market is too systemically important. They're going to bail out the hyperscalers. They're going to lower rates. But most importantly, which is why I believe that they're rushing to get this Clarity Act done by July 4th, they're going to prop up a new entire system and a new entire buyer of debt with the Clarity Act. The banks are going to be able to create liquidity out of thin air to back these finance projects that are going to go underwater. And that's why I think that they're in such a rush to pass the Clarity Act by July 4th. Patrick Witt, White House advisor, believes it's going to get done.
All right, I'm going to ask you the headline question to kick us off. The White House set a goal of July 4th for the Clarity Act to be passed. Is that still the timeline you guys are working with, or have your expectations shifted?
No, I think we're still making great progress across the 3 areas that Democrat senators had raised as ones that they wanted to see progress on. So every day we're doing the trifecta, either mornings or afternoons on ag, mornings or afternoons on ethics, and then the BRCA as that third one. So we're making progress on all fronts every day. Groups are at the table, trading paper. And so I'm still optimistic that we could hit that timeline, but we're doing a lot of work behind the scenes.
When that euphoria passes, the hype cycle is going to move from AI to crypto. Ultimately, it's going to flow into Bitcoin, but not after there's another boom and bust cycle. I believe that AI is what technology stocks were to the dot-com bubble. And I believe that crypto is going to be the same thing as to what real estate was in the financial crisis. Bitcoin is going to be underloved and underappreciated and misunderstood. And that's why the smart investors know that this is just the beginning. Crypto's not just going to have one wave, which we saw a little bit earlier and before, right around 2020. Sort of went through a second phase between 2020 and where we are today. But this is going to pale in comparison to the third wave. Listen to what Jordy Visser has to say about it.
And then you go to Stan Druckenmiller. He also mentioned the Elliott Wave book. So I immediately went out and got the Elliott Wave book and just studied it forever. And when I got into markets, I loved it. It's based on human psychology, and it's based on someone who is an accountant who studied every stock pattern and basically created the way that they move. So if you take every pattern, you go, what do successful up markets look like? What do down markets look like? And what he defined it as is you want to be, there's 5 waves up and then there's 3 waves down. Okay, so the 5 waves up, the third wave of the 5 waves is the biggest one. That is the one there, everyone's jumping in. That is the one where it is the easiest time to make money. That is like semiconductors right now. They're in a third wave right now. Now, third waves go further than you can expect. It comes from a place of doubt. It leaves people aside. And then usually when they peak, it's because everyone jumps in at the very end of the third wave. And then we consolidate before the final wave higher. To me, crypto is just about to start the third wave. That's my viewpoint, is that we're about to start the biggest wave by far, which will carry Bitcoin far higher than whatever number people can come up with. And just like we learned with Micron and Intel, when it starts, there won't be a way to stop it. So that's what I mean by third wave.
Bitcoin is one of the most sensitive indicators to global liquidity in the world. It front-ran the 2020 COVID crash and collapse. It responded first when there was a tightening in 2022. And ultimately rebounded quicker than everything else in the market during the 2023 banking crisis. It trades 24 hours a day, 7 days a week, and it's a global asset. There's no closing bell, there's no earnings report, and there's no weekend pause. And that's why Bitcoin tends to move before everything else, both to the upside and to the downside. This isn't just Bitcoin, this is all hard assets. And as you can see right now, hard assets are getting crushed. Gold is down 10% the past month. Silver's down 22% the past month. And Bitcoin is selling off right beside them. And that's because investors are forced to raise money. And right now they're selling investments in order to fund AI data centers and chip investments. But it will rotate back. And this isn't just my opinion. Here's a great article from Pierre Richard talking about how money is going into AI right now, but how it's going to flow out of AI and into Bitcoin. I highly encourage that you read it. One of the major differences that he talks about from previous cycles is all of the physical investment necessary in order to power these data centers and these big AI projects. But ultimately, all of these people are going to be forced sellers, or they're going to need a too big to fail backstop, aka the Clarity Project, and banks being able to create new money out of thin air with crypto rails in order to save these projects. But either way, there's going to need to be an intervention, and capital is going to rotate. And at that point, are you going to be a forced seller? Or are you going to be prepared? One of the ways that you can stay ahead of the game is by never selling your Bitcoin. If you truly continue to slowly accumulate Bitcoin, to raise cash, to be fearful when others are greedy and greedy when others are fearful, well, Bitcoin tends to work out in your favor over 4 and 8 year time frames. And those people who've been investing in Bitcoin for 4 or 8 years are the people now that don't have to sell their Bitcoin when a liquidity event happens. They can simply borrow against their Bitcoin, which has a higher value than everything else that's crashing in the market right now, and use it to buy assets that are distressed. That's what the smart investors are doing with companies like Ledn, an institutional grade backer that will allow you to unlock liquidity in your Bitcoin without selling your Bitcoin. No capital gains, money just flows right into your account. You can get fiat in your account in less than 6 hours, and the rates are less than half of what a credit card is. And the same people who've been investing in Bitcoin for 4 or 8 years are people that realize Bitcoin on an exchange isn't real Bitcoin. When you can actually see your Bitcoin on your private node and you hold the keys and are able to transact privately, safely, and securely and confidently, well, those are the same people that get it. And they probably hired a coach from the Bitcoin way. Someone from their team will walk you through step by step exactly how to do this so that when stuff does hit the fan, you're going to be actually prepared and not panicking. Schedule a free 30-minute consultation with the team at thebitcoinway.com to be truly sovereign. We're in the euphoric phase at the end of the cycle, and right now people are misunderstanding what's happening in gold, silver, and even Bitcoin with these sell-offs, and mistaking it for weakness in the asset classes rather than there's a limited amount of capital in the world right now that's chasing after these limited investments into AI data centers and the bubble, which will burst. And after this does happen, after the bubble does burst, people will be rotating into Bitcoin. I love this conversation between Marty and Checkmatey because it highlights exactly what's going on. The people who are going to be there in the end are the people who are able to withstand pain for the longest amount of time. Listen to this conversation.
That we have this IPO moment, go back through history. Generally speaking, there's like a hero IPO. And that's like the genesis point of the beginning of the end of the bubble. Because like suddenly the euphoria just goes. And in this scenario, where is Bitcoin going to be? It's going to be the most under-owned, forgotten asset of all time. People are like, oh, but when the bubble finally cracks, Bitcoin's going to get taken down to zero. It's like, dude, no one's going to own it. Who's going to sell it at that point in time? Like, that's what the time pain process does. It removes anybody who's sitting there going, like for me, I'm not rotating my Bitcoin profits into AI. Sure, would it be a good decision? Yes, but there's also like, I don't buy Bitcoin for the swing trades. I buy it for, and whenever I do buy, it's that long-term investment, right? I buy it for it's my longest duration asset. I've got play money that I stick in all sorts of stuff. But for my long-term duration, I don't trade my gold. I don't trade my Bitcoin. They're my long-term savings. So at some point in time, we've got a massive alligator jaws. They close. And everyone always assumes they're going to close by Bitcoin going down and stocks going down as well. It's like, no, they're going to close because Bitcoin's forgotten. And then suddenly it's going to be the only thing in the room that's moving. And what happens to all the fast money? So like the market is cyclical. We're going through this rotation. And I would actually say something I've observed, and I kind of had this idea as a theme. I do think this like idea of capital rotation, it feels like something that I know it's always been a factor, but even if you think about it from like the microcosm of the Bitcoin crypto world, it used to be like a rising tide lifts all boats. And that used to be the same for the stock market too. A rising tide would lift all boats. But now we've been in this like, oh, this sector's getting crushed, but these ones are doing well. AI is doing well, but this sector's getting crushed. It's a lot more of like a stock pickers market. And I do think that's more or less going to stay the same, but it kind of feels like, how do I describe this? In terms of like the energy of the market, it feels like the ponzification of everything, like real late stage fiat stuff where everyone has become the fast money. Like everyone is the fast money now. The system incentivizes people to chase the hottest thing all the time and forever. And that's why you're almost getting this like, almost like a resonance rather than like being this like stable pool of capital. It's invested in everything and a ball of hot money. The ball is the majority. And then there's like less and less of that fundamental capital because there's career risk. Oh, why didn't you own all these AI names? And then everyone just piles in. So yeah, it's an interesting dynamic, but I can't imagine that Bitcoin's going to be a heavily owned, heavily forced sale asset when it's all said and done because we're in the process of flushing them out as we speak. That is what this process is. Time pain. There's going to be no one left who, like everyone who's in the trench at the end of this process is going to be people like you and I. And who do I want to be in the trenches with at the outset of a bear market? Good stuff.
There's an old adage in investing that says you have to be non-consensus and right in order to have outsized returns. And investing into Bitcoin right now, even slowly, even if you're not pouring all of your life savings into it, is a non-consensus investment. The right trade, what everyone says during every one of these bubbles, is you should be in AI. You should be in data centers. You should be in these technology stocks. You should be in semiconductors. If you're not, you're going to miss out. But remember, world-changing technology can be wealth-destroying investments. Even with all of the headwinds against Bitcoin this year, it continues to survive. It continues to be here. And when capital does rotate into Bitcoin, you're going to wish you were one of the people that were able to withstand the pain and maintain. Are you slowly accumulating and raising cash? Or are you liquidating all of your assets to get in on the AI trade? I sense a bubble, and I feel that capital is going to rotate. But what do you think? And I think because capital is going to rotate into Bitcoin, I'm finding as many ways as possible to accumulate Bitcoin. And one of the ways is through SAS mining, through Bitcoin mining. You send them money to buy machines, and they take care of the rest for you. They buy a Bitcoin miner, they host it, they repair it, they keep it maintained, they keep it up, and they send sats straight to your wallet. You acquire Bitcoin for less than you could by buying spot. And you can do it without worrying about it at all. Use the QR code to get started with SAS mining today. I hope you're subscribed to the channel. This is Dante Cook with Bitcoin Simply. Happy stacking.